Ladies and gentlemen, good morning. I'm Seung-won Yoo from the International Relations team at the Bank of Korea. And I'm honored to be your master of ceremony for this event. Today we have a very wide audience, including the members of the Bank of Korea, as well as stakeholders from CBDC-related organizations, advisors for Money and Banking Future Forum, and journalists. All of us have gathered here today for a very special conversation between General Manager Carstens and Governor Lee under the topic of CBDC and future monetary system. On behalf of the Bank of Korea, I'd like to extend my sincere gratitude to all of you for being here today. Now, it is my privilege to invite Governor Chang-Yong Lee up to the stage for his welcome speech. Please welcome Governor Lee with a warm round of applause.
Today, we are very honored to have Mr. Agustín Carstens, the General Manager of BIS, here with us. We are especially grateful for your presence as we know how busy you are. And Agustín is a distinguished economic expert with a wealth of experience in global macroeconomics and finance. Before joining the BIS, he was a Deputy Managing Director at the IMF and served both Finance Minister and the Governor of the Central Bank in Mexico. He is globally respected as one of the best economists in the world. During his 6 years tenure as a General Manager at the BIS, Agustín has been instrumental in driving significant changes and innovations in the institution's history. In addition to BIS' traditional role of enhancing international monetary and financial stability through international cooperation, the BIS, under Agustín's leadership, has now taken a leading role in the global effort to prepare for the digital transformation, which has now become a new challenge at the forefront of the organization's agents and globally and also in the region in Asia especially. On October 4, the Bank of Korea announced the launch of its CBDC pilot project, making a new phase in our CBDC endeavors. The BIS team has played a very instrumental role from the beginning in designing this project by providing technical advice and guidance throughout the whole process of refining the CBDC network design. Many researches by Hyun and the BIS team was a really great input for us to think about this issue. And their concept of unified ledger, as proposed in several speeches and papers and research by the BIS, was a really blueprint for the future of monetary system in the world, but also it gives a lot of insight for us, for our team, to think about how we design CBDC system in Korea. And this CBDC issue was vital for us because it's not only the policy issue, but there are a lot of youngsters who want to have businesses in this new financial technology market. And this is a kind of event that many Korean youngsters actually is very much interested in how this whole system will evolve in the future. Once again, I'd like to express my gratitude to the BIS and Mr. Carstens for its invaluable assistance and kind support for our project. But now, I'd like to listen to Agustín's speech, which I know all of you have been eagerly waiting for. And so without further ado, please join me in welcoming General Manager of the BIS, Mr. Agustín Carstens.
Thank you very much, Governor Lee. Please give him another big round of applause. Ladies and gentlemen, now we will have Mr. Agustín Carstens for his keynote speech on CBDC and future monetary system. Indeed, as Governor Lee mentioned in his welcome remarks, Mr. Carstens is already so renowned that he doesn't need any introduction. So without further ado, let me invite him over to the podium. Please welcome him with a warm round of applause.
Well, good morning to all of you. It's a real pleasure to be here in Bank of Korea, and I'm extremely grateful to Governor Chang-Chun-ri for having invited me and my team to basically spend a couple of days here in Korea, deliver this speech, but also have a dialogue with all of you. I will use my time in this speech to talk about the financial system of the future, what we want from it, what will comprise it, and how we will go about building it. Before I do so, however, let me first say a few words about a totally different topic, artificial intelligence. 2 years ago, this was not at the top of the mind for many people. Today, we seem to talk of nothing else. Rapid advances in computing power and new algorithms on top of large reservoirs of data have led to systems so powerful and so lifelike that they raise fundamental questions about how we will work and even function as a society in the future. Who would have imagined a few years ago that we would soon have computer programs capable of absorbing practically all of the accumulated knowledge of humanity? Or that we could use them to automate complex tasks, perform mundane activities, and even solve previously unanswerable questions? Who can say with confidence how much further these systems will have advanced in 1 or 2 years' time? Now I would like to contrast the progress made in AI with the speed and depth of adoption of digital innovation in financial systems. In IA, advances today are measured in months, even weeks. In the financial system, it is in years, even decades. To be sure, there have been some breakthroughs. Many countries have introduced fast payment systems, and we can now access basic banking services via apps instead of visiting a bank branch. But flaws and roadblocks persist. Many of these are simply unacceptable given the technology we have at our disposal. The fundamental problems we still face in financial systems, in advanced economies as well as emerging and developing ones, include the following. Many parts of society remain unbanked without adequate payment, saving, or credit services. Underuse of financial services due to slow and costly transactions, low customer satisfaction, and feeble connectivity, particularly for cross-border transactions. These problems affect the economy and our daily lives in many ways. They put a drag on economic growth and hinder credit allocation, while aggravating income inequality and encouraging financial activity to migrate to unregulated shadow intermediaries. Why do these problems persist? Much of the blame rests on the way financial systems have evolved in separate silos and in a piecemeal way through minor tweaks of existing systems and processes. Legacy systems and outdated products abound. Many were adopted at a time when computing power and fast, affordable communications were scarce. Even today, money and assets reside at the edges of communication networks in separate proprietary databases or ledgers. These databases are patched together via third-party messaging systems so that messages have to be sent back and forth in a complex web of bilateral links, all following a separate path from the one corresponding to money or other financial assets. This means that almost all transactions need to be reconciled before ultimately being settled with finality, often with significant delays. All of this makes transactions in our current system slow and costly. Cross-border transactions are even worse, as systems need to be connected through international messaging networks on top of domestic ones, involving a raft of different legal and governance frameworks. The cost of these settlement inefficiencies don't just burden existing transactions. There are also immense hidden costs. Many potentially worthwhile transactions never happen because they are too costly or complex. This represents a significant loss of economic opportunity. We don't know what we're missing because these transactions can't be made. History teaches us that incremental fixes, while tempting and expedient in the short term, ultimately fall short. This is particularly true when incremental fixes accumulate on top of legacy systems. Each innovation may have a sound purpose, but the need to remain compatible with legacy systems hold it back. This is why I'm convinced that we need a quantum leap. And luckily, recent advances in technology make such a leap possible. Let me highlight the most significant of these advancements. Massive computer power, cheap instantaneous communication systems, near universal internet connectivity and smartphone access, available trusted computing indispensable for security and privacy, the possibility of representing assets digitally through tokens that encompass all of the information about an asset and what can be done with it. And in the not-so-distant future, rapid adoption in artificial intelligence and quantum computing. Exploiting these technological advances would allow us to build a financial system centered on the individual. This would enable a far-reaching democratization of finance where each person has access to a digital representation of any asset for financial purposes, regardless of its value. And they would be able to send or receive such assets in any unit or amount to anyone, anywhere, anytime, using any device. In other words, individuals could experience the same level of ease, immediacy, privacy, security, and reliability from the monetary and financial system that they find in other parts of their lives, such as when they make a long-distance call to anywhere practically for free, or make an e-commerce purchase from their smartphone. Society rightly expects nothing less. Yet the sad truth is that these growing expectations have outpaced the ability of our segmented financial system to deliver. The best way to knit together transactions and operations among markets and financial services is to bring them onto shared programmable platforms. This is what we have labeled a unified ledger. A unified ledger would be a network of networks that would allow various components of the financial system to work seamlessly together. In particular, it would have the potential to combine the monetary system, that is central bank money and commercial bank money, with other assets, making possible the instantaneous payment, clearing, and settlement of any transaction. Such a ledger would allow for the use of smart contracts and composability. A smart contract is a computer program that executes conditional if, then, and while commands. Composability means that many smart contracts covering a huge variety of transactions and situations can be bundled together like money Lego. With these new functionalities, any sequence of transactions in programmable money and digital assets could be automated and seamlessly integrated. This would eliminate the need for manual interventions that delay transactions. It would also enable simultaneous instant payments and atomic settlement across a whole range of assets. From the above, it is clear that the three main components of the unified ledger are digital and programmable money, digital assets, and the digital infrastructure that supports their operation and integrity. And for all these three components to work together, the key step is tokenization. Tokenization is a means of recording money and assets in a digital form on a programmable ledger. These tokens integrate the records of an asset normally found in a traditional database with the rules and logic governing their transfer. In practical terms, this means that users could transfer assets directly through programming instructions rather than through intermediaries such as account managers that act on behalf of the user. This transformation can unlock numerous benefits. For one, it enhances an automation and facilitates faster, cheaper, and more convenient transactions, alongside more efficient settlements processes. This could help overcome the settlement risks associated with delivery versus payment and payment versus payment arrangements, which are currently imperfectly dealt with through specialized institutions or workarounds such as escrow. Programmability could also enable the contingent performance of multiple transactions through smart contracts and composability. This opens the door to novel types of economic arrangement that are currently not feasible due to incentive and information frictions, even though they make perfect sense from an economic point of view. So how do we implement effective, forward-looking tokenization in a financial system? A logical first step is to tokenize money. After all, money is the cornerstone of the financial system, underpinning every transaction. And in most transactions, in most countries, it has already gone digital. Our fundamental trust in money stems from monetary systems built around central banks. The central bank issues the economy's currency that serves as the key unit of account and ensures the ultimate finality of payments through settlement on its balance sheet. Building on this trust, commercial banks then issue money in the form of deposits, which serve as the primary means of payment in our current two-tier monetary system. This two-tier system with central bank and commercial bank money ensures that the dollar, euro, or won deposited in one bank equals the exact amount of the same currency in another bank, or in the form of cash at any ATM. This crucial feature, termed the singleness of money, was highlighted by Tommaso Padoa's Chioppa in a speech right here in Seoul almost 20 years ago. The financial system of the future should preserve what works in the current system and build upon it. This calls for tokenized form of central bank money, in other words, a wholesale CBDC, and a tokenized version of commercial bank deposits. The CBDC would serve as the core of the system, while tokenized deposits would preserve the benefits of commercial bank money as the primary means of payment, both with the added benefit of programmability and composability. Tokenized deposits would also ensure that banks can continue to provide the financial intermediation function that the economy requires. Finally, by preserving the current two-tier monetary system, tokenized deposits preserve the singleness of money, unlike alternatives such as stablecoins. For individuals, a monetary system based on wholesale CBDCs and tokenized deposits would feel similar to the current one. Indeed, the introduction of wholesale CBDCs would not be noticeable for them at all. Users of tokenized deposits would still have bank accounts which they could use for saving or transaction purposes. But these bank accounts would have greater functionality. For example, they could buy shares or other financial assets without the delays and costs associated with third-party intermediaries. As soon as they make a transaction, the trade will settle and the change in their money and asset holdings will show up in their digital wallets. But tokenizing the monetary system would be only a start. We need to cast the net wider and more boldly if we are to capture the full benefits of technology for everyday financial transactions. Specifically, we should aim to tokenize claims on other financial and real assets, such as government securities, equities, or property registrations. And to harness the full benefits of tokenization, we need all the components to work together seamlessly. The key here is to guarantee that all the digital asset networks are interconnected and interoperable. The technology is already there to achieve this. The real challenge is to work out the legal and regulatory frameworks, the governance, and the communication protocols needed for such network or networks to operate. In short, we need to build the digital infrastructure. We need to be practical. It is hard to imagine that we will unify markets and transactions in every relevant jurisdiction. But we should aim for protocols that unify or interconnect systems to make them interoperable. As the envisaged financial market infrastructure will be a public good, public authorities need to take the lead here. Central banks should move fast to develop programmable wholesale CBDCs, as they are currently doing in many jurisdictions worldwide. Some may also consider issuing retail CBDCs to further expand society's payment options. Financial authorities should facilitate the tokenization of deposits, that is, the digitalization of commercial bank money. Governments have a role to play by promoting the tokenization of as many asset classes as possible. In addition, we need to solve sizable governance and legal challenges. And we must put the right institutional structures in place. To take one example, CBDCs are currently enmeshed in legal ambiguities in some jurisdictions. In most countries, the law constrains what central banks can issue as money, and evidence suggests current legal frameworks either do not allow CBDC issuance or at best are unclear about it. This is why we need to get the legal framework for CBDCs and tokenized systems more broadly. No less important is the governance question of how to bring money and non-money claims onto a single programmable platform. Ideally, different assets should reside on the same unified ledger so that they can be embedded in smart contracts that execute complex transactions. Once again, technology is not the main impediment. Instead, it is the fact that most institutional ecosystems have grown up separately and now need to be brought together. This will most likely require intermediate steps as we move towards the ideal of unified ledgers. There will be many paths to the future monetary system. It is hard to say which will be the smoothest or easiest to navigate. The only way to find out is to take the first tentative steps forward to see what works and then recalibrate as needed. Already many central banks are doing so, and the BIS is supporting them in these efforts. Our Innovation Hub has been working on numerous projects to address the specific technical questions that need to be resolved to speed the development and adoption of CBDCs and other tokenized assets, including commercial bank deposits, such as Project Jura and Project Mariana. Meanwhile, we are exploring and experimenting with the Unified Ledger project, building on the findings of these projects as well as the New York Innovation Center's regulated liability network proof of concept. If the scoping work is successful, we hope that this project will feature both tokenized central bank money and commercial bank deposits from multiple jurisdictions, and with time, tokenized securities. As well as these initiatives, we're providing advice and support to our central bank colleagues, including the Bank of Korea, on their own experiments. This brings me to the Bank of Korea's CBDC project, which I will refer to as the Digital Won. This important initiative aligns well with the vision of the future monetary system I have laid out today. It embeds a wholesale CBDC at the heart of the system and brings the regulated banking system on board through tokenized deposits on a shared ledger. But while the monetary core of the Digital Won project has a familiar, if technologically enhanced feel to it, other aspects of the project architecture are entirely new. These include the use of satellite platforms that interact with the monetary ledger, providing functionality for a wide variety of use cases, making the platform more flexible and open to market developments. In principle, I see the existence of such satellite platforms as being entirely consistent with the unified ledger concept, as long as they communicate with each other seamlessly. How they work in practice remains to be seen. Answering such questions is precisely what makes experiments like the Digital Won project so valuable. There is another aspect of the Digital Won project that I would like to highlight, besides its architectural design and technical sophistication. It is a partnership. The project brings together the Bank of Korea as well as the other key regulatory bodies in Korea, such as the Financial Services Commission and the Financial Supervisory Service. Other government agencies have been consulted and are on board. Legal questions have been or are being addressed. The banking sector is involved, as are other financial intermediaries. This type of cooperative approach is crucial if a vision like a unified ledger is to be realized. Without this, I fear that we would end up with a fragmented siloed system with many of the flaws we see in today's financial system still unresolved. Whatever its technical sophistication, that would be a big missed opportunity. Let me conclude. The future monetary system needs wholesale central bank money at its core, complemented by tokenized commercial bank money and potentially other tokenized assets. And these need to be combined on a common digital infrastructure. The concept of a unified ledger is the vision, the North Star, in designing the future monetary system. Turning this vision into reality requires us to go out and experiment. Only then can we learn about the challenges and how to overcome them. We must travel this road with determination and foresight, because it will be worth it. And as we do, let us be guided by our collective experience, wisdom, and the shared vision of a more efficient, transparent, and inclusive financial future. Above all, we urgently need a Neil Armstrong moment in our quest towards the unified ledger. We need to take that one small step for a man, one giant leap for mankind. In our case, this could be the successful and complete tokenization of wholesale CBDCs and commercial bank deposits. Thank you very much.
Thank you very much, Mr. Carstens. Mr. Carstens, could you please have a seat on the sofa on the stage? Thank you. Governor Lee, could you please come forward to the stage? Now we will move on to the dialogue between Mr. Carstens and Governor Lee. Governor Lee will lead this conversation. Now I will hand over the microphone to Governor Lee.
Thank you, Agustín. It's a great speech. I really like it. I think we talked yesterday. Your speech already have a significant contribution. You will continue to, but by giving us a name of our English name of our project, you call it a Digital One. We have been contemplating what should be the good name for it for a long time, but now you fix it. So, in Korea, it used to that for the newly born baby, grandfather give a name, and now BIS give us this English name for our pilots. Let me start first question few questions that we gathered from the media. And you already explained what kind of benefit from CBDC we can expect, what kind of changes of future monetary system will come if we introduce CBDC. But the discussion is a little bit more technical side, because not all experts in this room may understand. But from media and from the man in the street, I used to get a question. They don't understand all these jargons. Can you give me what is the real benefit of introducing CBDC in a layman's languages? Can I ask to answer that question?
Well, let me do my best. Cash today is the representation of a central bank liability that society is familiar with. Cash is really, at the end of the day, what identifies society with the central bank. But cash uses a technology that is very, very ancient. And as we see in today's development in society, society is moving very fast. Society wants to do everything in these little boxes we carry all day long. Mm-hmm. Now, there are other ways in which transactions can be done out of smartphone other than central bank money. But why not with central bank money? I think the difference between central bank money and the money that you use today in smartphones is the fact that CBDC is a liability of the central bank. Mm-hmm. That's the most secure type of money you could have. And I think we owe it to society to give them access to cash in the digital representation that they would prefer. I think that is what is of the essence. Reserves, which is the other type of CBDC, and that we call it wholesale CBDC, is the blood of the financial system. And it can also be improved technologically, and that's what we're proposing. It's easier to start with wholesale CBDC, and it's a broader question to have retail CBDC. So that's why at this stage we are pushing really hard for having wholesale CBDC.
As you mentioned, I think that was kind of our objective too. By providing wholesale CBDC, probably later retail CBDC, we can provide a similar instrument that now fintech and many non-bank financial institutions actually provide with the authority and the trust from the central bank. We focus on the term that you mentioned, programmability of the CBDC. And I think the big difference that we are emphasizing is that by introducing CBDC, we can program by smart contract. For example, when government tried to distribute money, previously we have to go through all the criteria and ask for the bank to do it. But with CBDC, we can program it so that government can directly target the beneficiary and then distribute, for example. So those kind of things are actually we trying to do it, as you mentioned. But when I explain these things, many people worry that, okay, then central bank has all the information and they have access our account. How can I protect my privacy? Is central bank can actually trace all the transactions that I have, and they are very reluctant. I think this problem is more prevalent in Europe. So what is your view on this concern?
Well, first of all, let's start from the point of view that a central bank per se doesn't have any vested interest in analyzing or exploiting that information. Mm-hmm. I mean, today, people do transactions in many different platforms where the name is being used and the transactions are being registered, both financial and non-financial, even when you browse Google. Now, all that information is being accumulated, processed, and is being exploited. I cannot find any good reason for which the central bank would need to access that information. So all types of, I would say, legal restraints could be implemented, but also technical ones. I mean, central bank has over 300 years of life, and we have not exploited that information. And we haven't needed to exploit that information. So why should this change into the future? So I don't see any reason why, just by changing the representation of money, the intent of the central bank will change.
I agree that no problem, but that is one of the reasons why we prefer to start with the wholesale CBDC. And even though we tried our pilot through the retail CBDC, but we find that maybe wholesale CBDC can generate the same benefit of that retail CBDC can have. At the same time, I think by just focusing on the wholesale CBDC and ask the bank to provide the retail ones, we find it's much more clear to calm down this concern on the privacy protection. And then the other question that I used to get it is that if CBDC introduced, and this requires a lot of mobile technology, whatever, and then the old generation at this moment is still complain that their access to the financial services is limited. Many banks are closing branches. They cannot use the mobile phone. So they are concerned then whether the introduction of CBDC will really crowd out the cash and that they will be more excluded. So do you think this CBDC project does necessarily mean they can coexist, right? So
yeah, no, I mean, CBDC, I emphatically say so, should not eliminate cash. Mm-hmm. Cash is an option that works very well. In a way, it's magic when I give you a bill and you say, that's fine, I'm satisfied with this. I go and do my business and I go and enjoy whatever I bought. Mm. It's really great, you know. Now, of course, the transaction costs of handling money are high. They're inconvenient. You need to safekeep them. But it should be there. They should coexist.
I think your answer is a great, give a peace of mind to my staff here who has to handle the cash still. So job security.
Absolutely.
And also when I explained this CBDC pilot to our people, I mentioned that we are doing a lot of pilots, but actual introduction of CBDC will take time. And Bank of Korea doesn't want to actually issue the CBDC officially before major countries like US and European countries actually introduce CBDC, because we are concerned on we probably have to reinvest the system again if they adopt a different system. So we see very little gain to be a front runner. Then I think many people ask me when EU or United States will introduce CBDC, and probably you have a better guess than me. So what do you think?
Well, I'm not necessarily more privy to information than you do. I'm particularly hopeful about the introduction of CBDC in Europe, in the ECB case. As you know, the digital euro, it has been moving very fast. They have moved from the stage of experimentation. They have done a lot of experimentation now to the stage of preparation. And I think that's a very significant step. So I think that in the case of Europe, that could be quite fast. No, other countries are taking their time. You know, it's not. I would say it's not an urgent matter. It is an important matter. Okay. That's the way I would put it. Why is it important? Because we have all these tremendous technological development. And as I say in my speech, we should be able to exploit them at its maximum. And we are not doing that today, you know. And a key vehicle for that and for the future financial system is to have a tokenized CBDCs and tokenized commercial bank money. And the one who can start with the example is the central bank. So that's why I think it's something that is important. It's much better to do it with time, in such a way that society is completely on board, that we have all the legal comfort behind us, and also that technologically we do it right, because it cannot fail. That's the only thing I can tell you that is essential. As a central bank, you cannot say the system is down. So that's why central banks need to prepare themselves well, but definitely something that they should have very clear that it should be in their future.
In general, I think agree, but you know, the recent introduction of PayPal USD actually make me whether central bank has enough time to do it, because at this moment, PayPal USD their service is confined to the United States. But the fact that the United States regulatory body couldn't say no for this kind of businesses, if this is a big if the Visa or MasterCard, who has a more international network, ask for the similar services in the United States, it's not just a US matter. And if they have a similar services with a global network, which is in Korea too, and it will directly affect our central banking. So what do you think we have to do as an emerging market, or if like a company like Visa and MasterCard, who has an international network, start to do the business of the PayPal USD, and then do we have enough time to prepare for all this transition?
No, I think you're absolutely right. You're absolutely right. I mean, there is a sense of urgency. It's important, and I would correct myself given your comment, and there is a sense of urgency, I would say that what we have seen during the last 10 years is many applications of technology in the financial system, many of which have been growing, let's say, in an organic way, or in a spontaneous way, without the strong foundations of regulated financial system and the principles of central banking. Some have worked, others have failed dramatically, and others can open a lot of vulnerabilities. And that's one of the, by PayPal, you just mentioned one. I mean, I think that the fact that through PayPal or Visa or MasterCard, these big names, a parallel system of stable coins could be generated that compete with sovereign currencies is a concern. And therefore, I think that behooves authority to move as fast as possible, given the constraints they face. But yes, I share your sense of urgency.
That was one of the motivation why we start this tokenized deposit first, because by issuing tokenized deposit, we want to provide alternative to the stable coin, unregulated stable coin, so that at least we can actually respond to the current challenges. So now let's move to a little more technical discussion. When we announced that we're going to do the pilot using unified ledger with tokenized deposit, we are starting with the banks. And then non-banking institutions and fintech companies are complaining that we are making the playing field uneven. They say that they want to have a direct access to this kind of pilots, but we are actually starting with the banking sector. So do you think this, this tokenized deposit pilot or an effort will be in some sense damage some of the fairness to the non-banking financial institutions and fintech?
I don't think so. I mean, I don't think that there should be any reason why these players should not be incorporated into the unified ledger. I mean, to be able to issue commercial bank money, you need to have some regulatory frameworks. You need to be a bank. But there are other financial transactions that are conducted by non-bank financial intermediaries, and they should have access to the ledger. So I think, especially if we think of the broad unified ledger, I don't see any reason why they shouldn't be incorporated.
We are actually thinking about two steps, because under our regulatory framework, we have a very strong regulatory and supervisory power on the banking sector, but for non-banking sector, still the issue is a little bit blurred. So we want to start the project with the banking sector first, but trying to enlarge it in the future. But there is one technical issue. It's regarding with blockchain technology, whether it's a private blockchain or the public blockchain. So from the beginning, do you think that your idea of unified ledger requires to use the blockchain technology, or can it be independent of the blockchain technology?
Well, I think it can be. It can use blockchain technology, but definitely has to be permission.
Right.
What we cannot allow is unpermissioned blockchains.
Right. So that complicates one issue, because you mentioned what is unique feature of Korean cases, and as you mentioned that Korea is very strong in tokenized asset side too. So most of the your pilot through the innovation hub actually is more this money side and tokenized deposit side. But in Korea's experiment, we are actually trying to really see the real user case of how to combine, integrate this tokenized deposit side with tokenized asset side. And then, so you call it a satellite ledger together with monetary ledger. Monetary ledger definitely has to be permissioned, blockchain technology if you want to have it. So it's more regulated blockchains. But when you have a satellite blockchain for the tokenized asset, it's run by the, let's say, non-bank financial institution and fintech company. When this tokenized deposit or money move to there, and when they actually use it in a open blockchain, public blockchain, and we are not so sure at this moment whether we can well regulate that flow, and especially what happened to last week of Binance, for example, and many crypto asset usages, they have been big fine. So they use money laundering, all this concern once the money left to the public blockchain, right? So in some sense, how we regulate this possibility if the money moved to the satellite blockchain and went to the public blockchain, how are we going to monitor money laundering, all these illegal transactions is an issue that our regulators are very much concerned. And at the same time, our regulators are concerned that the Bank of Korea's pilot, in some sense, give a wrong impression that we are endorsing in promoting crypto asset trading. So how are we going to address these issues?
Well, crypto asset trading that in many cases has been rough trading without the adequate institutional framework promotes the use of some technology that is very useful. Tokenization and blockchain can be used in a regulated environment, in a controlled environment, as it is perceived in the unified ledger. That doesn't mean that we are validating what crypto has been using or the way crypto has been using this technology. The good side of crypto is the use of this technology, and I think we have learned a lot of it. But the institutional arrangements and the organization, the way crypto is being traded today, is not what we want. Therefore, we should learn and use the technology that is available that will serve our purposes. And I think that it is perfectly fair to proceed in that way.
Actually, that's what I like your remark in your speech, that in order to check all these issues, you have to have a first step to see what will happen. So
absolutely,
that is what I think we are looking at by having this pilot, allowing the satellite, blockchains, and see how whether we can control or not. And depending on the outcome, we may change our regulation. So that's I think what we hope we have. But given this remark, I think this issue is closely related with Bank of Korea's current effort to change into our payment settlement system into the RTGS system. And when we have to introduce RTGS system in a couple of years. And the issue is also the same issue, that whether we have to allow non-financial institutions, non-bank institutions to access to our RTGS system. And so this is a similar issue. So together with this pilot, we have to learn a lesson and probably change our regulatory issues. So this goes to the question that you advocate the need for the quantum leap. And but in the recent few months, when we work with a regulatory body in designing these pilots, we find that there are a lot of different views, different interests from various stakeholders, depending on their mandates. So I want to have a quantum leap, but in reality, there are a lot of things, legal, regulatory, supervisory, a lot of issues on these things. So you have been doing many projects through the Innovation Hub, right? So can you give me some advice how we handle those kind of conflict or need for the cooperation and to expedite this process to have a quantum leap?
Well, let me give you an example that I learned this while I was governor in Banco de Mexico. Mexico is a large territory, and Banco de Mexico, to distribute its bills, we had a small fleet of planes. And when I was governor, the planes were very old planes. They have been planes that had 30, 35 years. And we were very diligent, in always introducing to those planes the marginal technology. So, I mean, these were DC-9s, old models, that had many updated kits. But after 40 years, you had a 40-year-old plane still, even though you have updated it. So at some point, you have to say, it's not safe, it's not convenient. The structure of a 40-year-old plane is not what we need today. And you have to face the reality that you need a completely new plane. And so that's when we decided it's time to get rid of this plane. And now we have very nice, safe planes, very efficient. They are safer. They don't contaminate. They fly faster, And if we have kept working with just marginal adopts, we would never. I mean, imagine if you still had to fly in a DC-3 to Korea. It might have the last radar or the last communication, but at the end of the day, it's a DC-3, Now you can fly a 787 or whatever. It's very nice, very comfortable. It's much better, And that's what is happening in our systems. We still have many DC3s, many DC9s in our systems. Yeah. And we're just updating them marginally. So we don't get the whole functionality of a modern payment system. And it's very difficult to think about it, but it should be doable. That's why in my speech I mentioned the example of AI. Mm-hmm. That's why I mentioned the example of telecom, of e-commerce. Yeah. What does need to happen to have e-commerce transactions out of your cell phone? Many things need to be coordinated. Now, why us in the financial system are not able to do that? Why they can do it in e-commerce? Why they can do it in the airline industry? You know? What is special about us that we cannot do this? So for me, that's the key issue. We need to have the confidence that we should do it. We should coordinate with other authorities. But the overarching objective of having a much better modern financial system should be driving force. And then all coordinated, we should pursue that goal.
That is, I think, one of the reasons why I like you, because as most people here are central bankers, financial regulators, supervisors, they have a lot of worrying about the risk. So, but I think I told them that if we check every risk, private sector will move forward. Yeah. And then the outcome will be much, worse than what central bank actually go and try to test the risk. So I hope that, we have to really think about the technologies moving ahead of us. That's the main essence of your speech, and we have to respond to it. My last question seems to be a little bit philosophical or broad, is that, you know that in Asia and emerging market, in the last century, we caught up technology of advanced economies, and there's income convergence, and we actually, our industrial sector caught up the advanced economies, much. On the other hand, financial sector dominance still goes on. And do you think this new technology will be a chance for the emerging market to catch up to this financial sector to the advanced economies, or whether this is going to widen the gap? I have some mixed feeling, because now this all decentralized, technologies will make all the intermediary. For example, in the international market, in cross-border settlement, it make a global custodians or settlement. All this infrastructure becomes unnecessary, and then we can maybe actually reshuffle all the market. That can be an opportunity. But on the other hand, by seeing the previous internet development make U.S. English much more dominant. Mm-hmm. So I have some mixed feeling how this new technology trend will give us a chance to catch up the advanced economies in financial sector, or do you think it's going to widen the gap?
Well, I think Korea has given a very good example in many fields of application of technology. I mean, I think in telecommunications, in video, in many different areas, Korea has shown that it's a powerhouse. And I don't see why you cannot have the same in the application of that technology towards finance. I mean, you have demonstrated that in many fields you can be the leader worldwide. Mm-hmm. So I think technology, in a way, should reduce the gaps between emerging and advanced economies.
That's the answer I wanted to hear from you. And actually I feel it, because when I look at many fintech companies and many small businesses, our K-pop business, whatever, they are using this technology a lot. I mentioned you that there are K-pop group who use NFT, all these things. Now, when they finance new businesses, interestingly, rather than they approach our bank, they get a direct financing through the outside, DeFi, whatever, new financial technology. So, I think this will be an opportunity for our industrial sector too, to get a direct access to the investors from outside rather than domestic financial institution. So actually, I believe this will be a good give a good pressure to the domestic financial institute to compete. So I think, like you, I see more potential benefit than the risk. And now I think we have to probably close our discussion, but this audience is economists, so they don't need any introduction of BIS, but this dialogue is now broadcasting to the public. And BIS is not well-known institution to our man in the streets. So, but the BIS, we know all how important BIS is. So can you give a final word what BIS is doing for the global economy?
Of course. The BIS is the bank of the central banks. And we do some banking transactions, but more than anything is the institution that central banks have put together to have a place, a meeting place, and to have a place to cooperate and collaborate for the good of the international financial system. I mean, you certainly are a shareholder, are a very active participant. So I would say that in 3 areas we work for the central banking community. One is in research and in preparing the ground for the discussions that 6 times a year the governors have in the BIS to collaborate and to learn what is going on in the international financial system and for all of you to be able to make better decisions. We also support many of the global regulatory bodies like the FSB, like the BCBS, and so on and so forth. A key aspect of the BIS is that the governors are very involved, as you are. He is the chairman of one of the most important committees in the BIS, the CGFS committee, that discusses how the global capital markets are doing. So that's a clear example of how do we cooperate. We also do banking services for central banks, and we also have the field of technology. There is a lot to be shared through technology, of what we can learn through technology in the central banking community. We're helping central banks to experiment. That's why we have the BIS Innovation Hub. So we are a discrete organization, but we are very effective, I hope, and to support the central banks for them to do their job better at the local level.
I think I can assure you that most of the literature that our staffs are big reference and use it for our own policy making. BIS papers, a lot of research papers led by Hyun-Sung here, and also the Innovation Hub and many work done by the Asian office led by Tao is a great input to us. So definitely we know how important you are, and then I hope that this can be an opportunity for our people in the street know that BIS name from now on. So anyway, thanks very much. We have 1 minute past time, but I think 1 minute is acceptable. So thanks for visiting us, and please enjoy your visit to Korea. Let's give a big hand to Mr. Augustin.